Hey, welcome back to Everything Money. We're glad you joined us again. This is Seth, Paul, and Mo. I'm going to fidget with this mic the whole episode because that's what I do, and that's what our followers love. They also love my flowery shirts, Paul, but that's not why you're here. In this video, we're going to look at Lockheed Martin. We're going to look at the financials behind this company. Is their stock price in line with the money they're making and their bright or not so bright future? We will also look at the trading aspect of Lockheed Martin with trader Mo and that glorious leader of the Bid-Ask Nation. Paul, you often say, show me a company that works really well with the government, I'll wait. And many of the rebuttal we get from our followers is Lockheed Martin is one of those companies.
No, I say name something the government does that's efficient.
Go on.
I'll wait.
I misquoted
that's what I
you.
say. And by the way, I still believe that all these private organizations that do deals with the government are probably still, it's still fat and rosy and all that stuff.
Lockheed Martin is obviously, they just make supplies, Paul. I mean, they're the largest defense contractor globally. Everyone knows them. It seems weird as a layperson to look at the financials of a missile making company like this. But just because I didn't even know these companies kind of exist, right? You don't think about who's making all the
planes.
Bombs. Planes?
Too. Yeah, F-35.
That's right. That's right.
Fighter jets. Yeah. Fighter jets. But either way, you want to get started on it?
Let's do it. Market cap, baby.
Okay, it's about a $100 billion company. Now we have a 5-year P of 18.13. That's a check mark because we want less than 22.5. Pretty decent profit margin, by the way. Return on invested capital, 12.7%. We wanted over 9%. So that's
Very
a check
good.
mark there. Now, Sethi, 2.9% dividend. So that's over double the market currently.
Nice. Pays
$2.9 billion a year. For those of you who are new, remember, you don't just believe the dividend. You have to compare the dividend to the free cash flow the business is producing to make sure they can afford it. And right above it, they can easily afford this dividend. They pay a large chunk of their free cash flow out, but their average free cash for the last 5 years is $4.6 billion. They're paying 2.8 out, 2.9 out in dividends. So far, 2 checks. And the dividend is supported.
Pillar number 3, we always look at the revenue. We want it going up over the past 5 years.
And it has gone up. 49 billion up to 66 billion, which I'm kind of surprised by that.
Just in the past 5, huh?
Yeah, but either way, that's a very big jump. More power to them. Net income.
Profit growth is pillar number 4.
5 billion
Wow.
up to 7.14 billion. Check mark there.
Ooh.
Okay, so they're generating some good profit.
Okay. How about shares outstanding, which is pillar number 5? We want this number going down. Hopefully they're buying back, Paul. What do you think?
So 288.5 down to 277.4, which is a check mark. It's not much buyback, but it's still buyback. And for a company selling this a low valuation of last year 13 times earnings and the last 5 years 18, I like seeing that aspect to it.
I can see why our community really requests this a lot because it's already meeting a bunch of pillars.
Yep.
And if you'd like to join this community, you can get access to the software behind Paul. You can have it right now by joining everythingmoney.com or Patreon. Paul, tell them what they'll get when they join.
So guys, this was created because our users said, how do we get the software? Because I kept using software. Here's what you get with it. You get the mobile app. You get the 8 pillars. You get all 30 years of financial data. You get a stock analyzer tool, exclusive daily content for people who belong to the software, access to all 3 of us, several other things, including the Discord community, where right now there's over 6,200 people who have access to the community. Guys, it is only 87 cents a day. If you are serious about your financial future, 87 cents a day gets you all of this, and I guarantee it will pay off huge amounts in your life. And compare it to $199, $199, and $35 a month. This is a no-brainer. Click the link below. And let's get back to Lockheed Martin.
Okay, pillar number 6 is total long-term liabilities divided by 5-year free cash flow. We want this number under 5, talking about paying off their debts, Paul.
So what we do is we go back to the main page. We look at the 5-year average free cash flow, $4.64 billion. We multiply it by 5, and that's $23 billion or so. So my goal here is that I want their long-term liabilities to be under $23 billion. Why? Very simple. Less debt, more likely the company sticks around. The analogy I always give is, let's say you and your neighbor have the exact same house, the exact same job, make the same income, same family. They've got $10 million in debt, you have 0. Who's more likely to go bankrupt?
Of course.
Now, debt can be used well, but at the same point, we don't want too much leverage. So what we do is we go to the balance sheet, we scroll all the way to the bottom on the most recent quarter, $30 billion. So that's an X because we wanted under $23 billion. Now, does that mean throw this company away? Not necessarily. This is all 8 pillars are all about the high level. Is this what questions do I need to ask going forward? So one of the questions I would ask is, what makes up this $30 billion in debt? Because it looks like they've had around $30 billion for several years now. This is quarterly data right here. So they've had $30 billion in debt for a very long time. All right, now for the big mamma jamma.
Pillar number 7 is free cash flow growth over the past 5 years.
Reminder, free cash flow is cash from operations less your capital expenditures, and you use this money to pay dividends, buy back shares, pay down debt, make acquisitions, things like that. This is my most important attribute. 4.13 to 4.97 check mark with the average of 4.64. So we have a check mark for pillar number 7, and pillar number 8 is we take the 4.64 billion average, multiply it by 20. This kind of gives us an idea of where do we want to be in terms of our value for the company. $93 billion. It's currently $100 billion, so it's pretty close. Does this mean that $93 billion is a set number? No. This is a starting point for us. It all depends on growth rates. We will put this stock, and by the way, let's go show you our 8 pillars tab, for those of you who don't know our software.
And you can click this right away, folks, and quickly screen companies with just one click.
So, like we said, the long-term liabilities was an X, and the price to free cash flow was an X. Everything else was a check mark, and it allows you to sit there and say, okay, I need to understand more about their debt. Is this debt really concerning to me? Because different companies have different debt levels. So you have to understand that. Now, we're going to go to Mo for the chart. I'm going to start inputting the data into our stock analyzer tool so we can go forward and see what we should be looking at this company for.
Mo, are people trading Lockheed Martin in the Bid and Ask Nation? Look at that.
So this is a great stock to trade long-term, and that's why it's actually in the Employed Trader series, because when you get these long runs, like so, it really, you can capitalize a lot of gains going up and coming down, as you can see. I mean, you can make really solid runs, and there's not a lot of volatility that goes on with Lockheed Martin. But for right now, this is just a patience game for us, because this is completely a dog stock coasting along on the bottom, and I threw it in here as it was in this oversold area. The reason was, I want to be one of the first people in this thing when this pops up and gets into the sweet spot, because this thing is going to give us a really long run, well over $400 a share, in my opinion. So that's why we're in this one. But the challenge is going to be, of course, you have to pay attention to your moving averages. Here are your moving averages that you're facing.
Yucky.
100, 200, 50, and you're really fighting 25, and you've been doing it for a month. So it's really just going to take time, volume. There's a lot of good things coming out about Lockheed Martin. Eventually, this thing will get going, and it's going to be a great stock to be in for the long term.
If you're patient and can stick to rules with Mo, you can join him in the Employed Trader series. He alerts you on a daily basis what to do with a series of, is it 5 or 6 stocks now?
6 stocks now. Lockheed Martin was the 6th.
So he will alert you on a daily basis. If you don't have time for all this mumbo jumbo and just want to make a few trades, it's interesting. Mo, we have seen people who have gone from being scared to invest at all to trading very quickly.
Yes.
So Paul, you got the stock analyzer tool. Folks, this is the final piece of the puzzle. Say you're interested in this. Let's get a general ballpark of what we should be paying. Again, folks, Lockheed Martin's $352 today. Is that it might sound expensive to a normal person. If it was $3.52, now it might be cheap. Let's separate that mindset and see what is it valued at, Paul.
Okay, so the stock analyzer tool will ask you for some assumptions. You'll see these assumptions here on the board: revenue growth, share change, profit margin, free cash flow as a percent, which is basically free cash flow margin, PE, price free cash, etc. Here are my assumptions I've made. My job is to be conservative. Why? Guys, it's your money. You worked hard for it. There are 10,000 stocks out there to choose from. Be conservative and find the 20 to 40 stocks that fit your criteria exactly the way you want them to fit. So be conservative. I'm going on lower revenue assumptions. I'm going on share change assumptions. Oops, I gotta go negative 1.5, not negative 0.15. You do 8, 9, 10%. You'll see these, I hit the analyze button. You'll see these examples below, the sample below. So guys, according to this, right now, the current highest value is the only one that puts us in green. So right now I'm looking at this saying this is an overpriced stock. Do I want to be? I probably want to be somewhere around 250 or so when I'm buying the stock. It's at 350. You might sit there and say, it's going to take forever to get there. You would be surprised. Everybody go look up your favorite companies, see how they've done in the last 2 or 3 years. There are going to be ups and downs on a lot of them, except for the high-flying tech ones for as of late. But just be patient. If you like this company, if you do more research and say, I want to own this company, wait for the right price for yourself. I'm not saying my assumptions are correct. My assumptions could be very off, high and low. It's about you doing, it's just a starting point here to say, you know what, this company seems expensive. It's not in my ballpark. I'm probably going to put it aside and say, I will wait. I will find another stock that might make more sense to me.
We deliver more content in our community, Everything Money. If you want the inside sneak peek on what we're thinking, again, we do analyze a ton of bangers, Facebook, Microsoft, but we are doing exclusive content for our patrons in our Everything Money community. So join there if you want more from us. All right, that's our take on Lockheed Martin, Paul. It was $245 just 3 years ago. So patience is always the key here.
Patience is key.
Thanks for watching the video. Fondle that thumbs up, and we'll see you on the next one. Thanks, guys.
Thanks, guys.